Okay. Welcome everyone. This is Rangadad. This isn't financial advice. This isn't financial advice. It's just the way I'm looking at the market right now. Typically, this is just what I'm doing at the start of the day to get a feel for which way I think I want to place trades, if I do want to place trades. Things change pretty quickly, so don't necessarily think that this is exactly what I'm going to be doing when I do actually place trades. I am more of a sort of momentum based trading style, and momentum can shift pretty quickly in crypto. So, with that, we'll actually just go through what happened overnight. So, for a couple of guys in the Origin server that saw it, I think I posted in the VSpec server as well. Well, I did. At this point here, where were we? Sorry, I'll just go to 15. Yeah. So this is what I was looking at last night, and obviously price was sitting there at that particular time. I was expecting it to come up, hit the 200 EMA on the 15-minute, and then pull down. I've actually changed this. Sorry. When I was doing this, the trend line I was looking at was actually through there. I think. So, yeah, basically, I was looking for it to come down, break out of this trend line, pick up at least into this area here, just because the vectors were there, and then potentially move back up and retest that trend line, which it did, but it also basically reclaimed it relatively quickly, within an hour or two. As soon as you got that big green candle there, lots of volume, closed above the 200 EMA, that was a pretty good sign that we were going up from there. It did come back within a 15-minute candle and sort of retest the middle of the... is that the middle? No, sorry. Just retested the top of the Bollinger Bands that I got. Retested the 50 and then moved away to the upside. Had another secondary retest of the 200, which is a pretty bullish sign as well. And then as soon as it broke through the 800 on the 15, it was straight shot to the upside. Now, fortunately, I was awake somewhere around here. So I actually closed half my short position, and which left me with quite a sizable long position. Nothing that I was gonna get. I didn't have the potential to be liquidated to the downside or anything like that. So obviously went to sleep and woke up this morning and it was up around here somewhere. So I managed to close that out for a pretty decent win. So it's the benefit of running hedges, particularly overnight when you're asleep. Basically helps prevent you get liquidated if things do go in the opposite direction. That's the one downside of, like, if you slept through the Australian trading session, you're probably not going to miss a hell of a lot. You sleep through the US trading session and you can miss all sorts of stuff. So I actually did a little short from that position as well. Now I'm kind of running another hedge, which is biased to the downside, just because on the 15 and the 5-minute, we're sort of coming back within the Bollinger Bands. We got BBWP volatility is decreasing. The CCI bands are quite high. They're both, or they were both above 50. So typically you will see downside when that's the case. This was a pretty good retest though of, or reclamation of the 1 hour vector candle. So that's a pretty wicked 1 hour candle there. I am actually expecting another leg up here. And I'll go into the longer time frames in a second as to why, but I just thought it'd be interesting to start at this point today. So yeah, look, that there is actually quite a bullish candle. So I'm not pretty cautious about this short, to be honest. It looks like it's playing out okay for the time being, and targets somewhere in around the I think that's a 13 EMA that I'm running there, the red one. Somewhere around that, I'll be looking to close out the short if we get there. But yeah, this, I was a little surprised it didn't reach for the 800 EMA up around that 61.7. Basically because we've got the wick up here, you know, little surprised, but some people taking profit. What we could see is something similar to this. So we've had one bounce, not a strong looking chart at that point there. Like that's not looking strong. But obviously they liked the data that came out, which when we look at it was the interesting thing, the forecast was changed. The previous and the forecast, if you look at yesterday's video, I think we looked at it then, the forecast was actually 0.1. So they've changed the forecast before the thing came out or after it came out to make it look better or something, I don't know. But the actual came in at 0.1, which the market obviously likes. Just means part of the inflation calculation is likely to be coming down. That's the primary producers index or something like that. And yeah, so markets liked it in general. I'll get back into the other charts in a second, but as you can see here, we did sort of bounce on vectors as well. So it doesn't surprise me that it's coming back in a bit. It needs to close below the mid band of this Bollinger here, and you've got the 50 EMA in there as well. But we are inside the cloud for the VWAP, anchored VWAP. So typically you would see it retrace probably most of this, to be honest. So we could see a retest of the 200, and markets are skittish. So, you know, good runs up are being met with selling. That's a pretty good push through that 50 EMA just there, actually. Right at the start of the 5-minute candle. So I'd probably expect continuation of this for the time being. This is a first target here. It's down basically the bottom of this wick, which has pretty well reclaimed that vector candle as well. Got a few in here. There's a few below, but they're not massive. I don't think we have to come back to them at the moment. And to be honest with you, I'd kind of be surprised if we come back into here. I just think that looking at this, we've got one leg up here, and this area here, if you remember rightly, was so we had a level around that 57.5 ish. I think on one of the discords they were at 57,700, and yeah, we hit pretty close to that. Yesterday's closure below the 200 EMA was concerning. If today's close is above that, pullback into the 200 EMA wouldn't be unheard of, and that's at about 59,500, which, funnily enough, is around your 200 EMA on the 5 minute. And whoops. And it would be coming back into the 200 EMA on the 1 hour as well. So big swings, which is good for trading. But if we look at it, I'll just get rid of I'll just get rid of some of these because they're done now. It's a messy enough chart as it is at the moment. About all that crap. Okay, so basically we've had a run up. Choppy as buggery, but then we've had a run down. We've got a second leg up, and the second leg up looks like it's longer than the first one. And if we just, I'll just take wick to wick. Where should we take that? I'll take it from there. A little bit longer, similar sort of size. If we come back into there, next target 62,700. Now that takes us up to these wicks here, which I think is a pretty good target, to be honest. Where we go from there will be interesting. What we'll do is, I think the other day we also did a measure of this one here. So we said, okay, there's that, and then there's that. I think one of them's, I think this one's actually longer. Oh, that's pretty similar actually. But then if we take that as a base there, you're actually into that 65,800 level, which is top of these vectors here. So that again actually proofs out pretty well. So for the bulls, that's, I think, best case scenario there in the short term. So 66-ish, 65, 66K, somewhere between there. Probably close to the 65 and a half. Yeah, even 66 and a half is doable. But I think you're going to find a fair bit of resistance at that point. So short term, potentially over the next 24 hours, if not 48 hours, target is high 62s, potentially to sweep the liquidity that's just above this level here. We'll have a look at that in a second as well. For the time being, though, short-term pullbacks are sort of the expected reality. Doesn't have to be huge, though. We are coming off decent stochastic momentum on the hourly, though. And volatility looks like it's about to roll over. So slowly trickling down into that 200 EMA is probably the order for the day. Unless Asia comes in and decides to pump things. But the Asian session yesterday was just terribly slow. Low volume. They just didn't really seem interested in it at all yesterday. Yeah, it was just a slow drag to the downside, which I think is probably what's going to happen today as well. So, sorry if that's really small, but that's kind of what I'm expecting. And I guess a pullback into these areas here, that's probably not the most accurate trend line there anymore, but you know, somewhere in there wouldn't hurt. I mean, it would make a lot of sense if we came into there and then up like that. Okay, so when we are coming off big runs like this, you do tend to get a bit of bounce going on. But the fact we have sort of come back inside the Bollingers here, I still think probably short-term bias is downside. In saying that, we could just run straight from here. And the reason I say that is if we go to, let's go to the S&P 500. We've hit a pretty key level on the S&P 500. You'll notice there I had a vector resistance. It's not vector resistance, it was just closing the gap. So we've closed that gap. We've got CPI coming out tomorrow. And as we went through yesterday, we have some gap fills as well. Obviously, they didn't worry about that target. But we've now got another gap fill below in here. So I think CPI is going to be pretty critical. There is a core wall up around, I think it's 54.40, somewhere around there. So we're pretty much into that level now. If CPI comes out nasty, or even retail sales, but they're actually expecting a bump in retail sales. That's surprising. But yeah, inflation, if inflation comes in hot, which it has the potential to do, obviously, then expect downside on this. Whether we come straight back into here, don't know. I mean, it would kind of make sense with a core wall up there to pull back, especially after a decent run. And as we looked at the other day, on let's do it on the daily. Typically when you get a run up after a correction, and this is a big run up actually. You do have some pullbacks, but this is actually looking more like this run up. Pretty well straight shot to the upside. As an overall move, it's nearly 6% in the space of 2 weeks. It's not a bad effort. But yeah, you quite often on a V shape, you will get some sort of pullback. Just have a quick look at this one here. That was about a 6% move as well, and then pullback. But you're not expecting a huge pullback. If we sort of pull back and really dump hard, we could get something like this. But again, I don't think that's a super likely scenario there. It has reclaimed that Gaussian channel mid-band as well. Not that I think that's super important on the S&P, but we're definitely above the 50 and the 20 here. So, look, hard to be bearish on this. You would expect pullbacks to be met with buying demand. And yeah, like after a run up like that, you kind of would expect a pullback. But, stochastic momentum's the upside. Your smart money indicators starting to fire. All signs at the moment are generally bullish over the medium term, so next few weeks at least, just with some pullbacks potential. NASDAQ, interesting, had some indecision yesterday. That's pretty well decision made. Again, I'd be very surprised if we didn't get a pullback. This is a good level for a pullback off the 50 daily. Pullback into that trend and then off again. So that is probably my base case at the moment. Yeah. And we realistically, we could go down a little bit further. But at the moment, it seems to be running on the assumption that the Fed will cut. And yeah, so far to the upside. These gaps could easily be closed later on when we get the final dump into recession, depression type stage. Again, what you want to see is 0.25% cut in rates. And I think basically with the markets recovering the way they have, the Fed will probably look at that and say, well, okay, it's all good. That was just Japan did that. Don't worry about it. We'll cut 0.25 because there is some weakness. There is jobless claims are increasing and number of job creations is decreasing. So I think 0.25 is probably a good level, and 0.25 essentially normally when that happens, it leads to a big blow off top, and it could be a year-long run. Like we could actually go on a decent run. I think things are probably a little bit too far gone for that, but 0.25, maybe a little pullback after that, but then typically after a 0.25 one, you go on a decent run. Then after, whereas if we get 0.5 or higher, typically you're actually already in strife and the market does not fare well after that, pretty soon after that. So it'll be an interesting one this week. It's probably one of the more critical ones. But yeah, that's essentially what I'm looking at. There's an interesting dilemma here. The equal weight increase, that's cool. Equal weight's going well. Equal weight NASDAQ's going well too. Big volume yesterday. Strange. That's quite a big reversal actually. The IWM is looking like it's recovering, closing some gaps. It's not cleared some key levels though, so looking to this to actually jump to really confirm that everything's okay. XLI is going well. One to watch is regional banking. So typically in a major market crash, your banks are sort of one of the first ones to go. And yeah, they went down pretty hard last week, but they're still holding pretty good level here. So no real signs of any major issues there. And the other one is home builders or home construction ETF. So that's again trending up as well. So, and looks like it's got a fair bit to run on just in terms of stochastic momentum. DJI Gold is an interesting one though. So we say that typically breaking key levels on this tends to actually signal downturns, and it looks like it was a bit of a black swan in terms of this didn't really signal it. This has come down with the market, but if this closes below this level here, so the 1575, I'd be getting a little bit worried because typically, closing below a key level here, and you can see the S&P took a drop to the downside, and you can do that on all sorts of levels that you come through, but Again, here it was pretty well at the bottom, but breaking below there, pretty decent downside on the market. So just something to be aware of. We are coming into a fairly low point on this as well, though. So like we haven't seen levels this low. Apart from that, back into January 22. So, and as you can see, with the bigger drops, typically this goes pretty early. So yeah, 21st of Feb 2020, it was pretty well just after the top. So that's a fairly key one to keep in mind there. But probably for a massive crash, you're actually looking for this to take a bit of a run. Although Dow Jones has been pretty crappy performer in general compared to the rest of the market. VIX is dropping, no real surprise there. Skew, let's have a quick look at the skew. So the skew is crushing a little bit. So that would kind of play with the this being a pullback area on the S&P 500. High yield, that's a pretty solid move. Again, overall, the market is looking generally strong, but it does look like sort of short-term pullbacks are likely in the next couple of days. Let's have a quick look through these. UK 100, it's cleared that 50 EMA there. That's a pretty good level. Stochastic momentum's up. Volatility still high. Japanese market is going on a decent run still. The 200 might be an issue for it. I'll have to wait and see. Gold had a bit of a pullback. Not much of one, just a pause at the highs. Silver's still struggling a little bit, but oil, decent pullback there. Let's go to US oil. Yeah, decent pullback. Looking for some support around the $77 mark. What do we have on that? So that's actually, sorry, let's just go. That's pretty much pulled back to, hang on. We've pulled back to the 618. It's a good level for this to actually run to the downside. Typically, if you see bounces off that level or the 0.5 or the 0.382, you would generally see a decent move. So look for pullbacks on oil, but oil can pull back slightly and then rip as well. So just be careful with that assumption. Dollar is down still. So we didn't get the run up in the dollar that we thought we might, just based on where stochastic momentum was and the way things were looking, which is obviously good for stocks. Surprising gold didn't really run further with the dollar coming down that much. Copper, still struggling, but generally still eking to the upside. We want to see a decent push on copper for us to be confident that this is a good level. Uranium is in the toilet. It's around a key level there, though. Aussie dollar had a good run with the US dollar struggling. Where's Aussie Euro? Yeah, it's holding. Sorry. Japanese yen is still sort of holding this level. Would expect this to come down a little bit more. Where's Euro US? So Euro US looks like a decent breakout. Well, not confirmed breakout yet. If this does break out above that level, US dollar is probably going to break below here, and next target would be around the dollar mark. So that's an interesting one to watch. Brazilians still heading to the upside, break through that 50 EMA, which is good. British pound is going reasonably well. Not exactly looking like we're on the brink of war at the moment. Interesting one to keep an eye on is the Case-Shiller Home Price Index in the US. That's still heading up. So there is a supposed 18-year cycle. I think it's 18 years, where the top in the house price index typically signifies top in the markets. And that was pretty well the case back like when it started actually rolling over and closing below the 20 EMA on the daily. Then yeah, we actually got the market crash, or it basically signified the top of the market or very close to it before the GFC. But we are still heading up at the moment. So another sign that we're not really close to that full market capitulation yet. We might be in what they call the winner's curse phase. That could be the case. Credit card balance, credit card debt balance. Interestingly, we had a little pullback here at the top of the market, but it kept going up. So this isn't really a signifier of a recession. This is more actually a signal that we're coming out of a recession when you see this really start to drop. So that's an interesting one to keep on the charts. Big drop there, signaling out of a recession. Auto loans as well, something to keep in mind. Once it starts to sort of flatten out and drop off, then we would probably expect the recession to be started. Yeah, not a great indicator, but the fact that this is still charging the upside is probably reasonably bullish. Australian house pricing index is still breaking to all-time highs as well, so you need to see a bit more of a turnaround in that, I think. Percentage of stocks above 15 moving average actually decreased today, which I don't see how that's the case, but it is. So still upward trending, but when you got the Russell moving up, I guess it just goes on total number of stocks that are above that level. So looks like a lot of them have probably had small pullbacks. That's all. A lot of the smaller stocks probably, because yeah, the Mag 7's obviously leading the way on this. Closed above the 50 EMA. Nvidia has closed above the 20, which the 20 was holding it down, all the way down so far. So that's a pretty strong close. What you don't want to see is a close below that. So just basically a fake out of the 20 EMA. But yeah, so far that's pretty good buying region. Airbnb, that's going to be one of my favorites for the time being, I think. SMCI. So generally, it's the recovery is still happening. The key is going to be what happens on the with CPI and then the actual interest rate decision in September. The fact that they haven't come out with an emergency meeting and all that sort of stuff, I think just shows you there was unnecessary kind of panic. So yeah, Bitcoin struggling to break through the 20. Sorry, is that a 20 or a 13? I think it's a not 20. Okay, 20 EMA on the daily. But good closure today. If we close above that 200 EMA, that is a pretty good level. But yeah, as I said, wouldn't surprise me if we pull back into that. Sol is confirming above the. Sol's actually got an indecision candle, but generally confirming above the 200 EMA is a good sign. Surprised it didn't go on more of a run, actually. Looks like the interest is mainly in Bitcoin. The Bitcoin dominance is pretty high at the moment, which is good. We want a decent run on this before we actually get to the top of the market. But healthy signs that we could be going to all-time highs before we see that 44, 45K zone. ETH dominance is kind of in the toilet. I'm pretty sure this is against the alts, not necessarily against Bitcoin. Yeah, so we did sort of bounce off that value area low there as well. Be good to close above that. Be good to close above the daily 20 EMA. If we do that, at least the daily 20 EMA today, then I think the upside scenarios are more likely up into that 65.5. Yeah, maybe a bit lower. That volume profile suggesting we could even reach into 67. If we do reach to 67, that would be time for a pullback, I think. But on the higher time frames, you're talking about, okay, pull up into there, come back somewhere into about 62.5 again, which 62.5 I think is going to be a pretty key level in both directions. And then we get the push to the upside. So yeah, obviously yesterday had a pretty big switch in momentum, and certainly my bias turned pretty quickly from bearish to bullish once we saw that reclamation of that trend line. But definitely wouldn't be surprised if we get a pullback into the 59, high 59s today. And if we go to the heat map just quickly, sorry, they're the trades that I'm running at the moment. So yeah, that got up over 800 overnight. Took a few stupid ones this morning, but generally closed them out and settled on what I got now. So yeah, going all right with this account. It's been, I think it was a week today, actually. Been about a week. It's up about 50%. So see if we can do something similar to that each week. So I think the weekly gives a pretty good picture of where the liquidity is, but if we just go to the monthly, there's probably an even better picture. There's a lot up here. Done a pretty good job, really, of keeping the liquidity fairly low on the way up here. So key level up around that 67 there, which we just pointed out. That was a high volume zone. And then you got that 66, sort of 65 to 66 zone in here as well. So interesting target. We're a long way from there. That could be over the next week. If we come down, obviously there's a bit down here, but it doesn't, at this stage, it doesn't look like it wants it. The only concern here is if we don't break above the level, sorry, if we go out to, let's do it on the 15-minute. So really kind of need to, I mean, realistically, it probably, yeah, shit. If we bounce somewhere here, you could probably make an argument that that's actually a breakout of that wedge. Interesting bounce at that point. I would like to see it come back down into here, though, at least. Just have a stronger confirmation. A wick confirmation on a breakout isn't great, but if we sort of close around here or just below and then reclaim it, then that's a bit stronger. But yeah, in general, somewhere in, realistically, somewhere in this region here is where I would expect the next bounce. If we sort of come right back into here, it gets a little bit dicier. But there's still very strong level of support in around that high 59s. And based on what it's been doing around key levels at the moment, you wouldn't put it past it to come all the way back here and then bounce. Yeah, I mean, it looks like more of a trend line there between these highs, but yeah, a little bit of liquidity in here, but it doesn't look at this stage like it wants it. Coin Inc. There were some massive movements of Bitcoin into exchanges yesterday. I saw multiple that were sort of well above 1,000 BTC. So most of them are up around, well, some of the ones I saw were up around $100 million worth. That was kind of why I was biased to the downside at the same time as well. But so far, there's still a fair bit coming out of the exchanges, but these bigger ones concern me a little bit. So kind of think tonight, the CPI reading will kind of determine which way Bitcoin actually goes. Coming down into this level here, so your high 59, 59.5 would eat a few pretty decent orders and sweep quite a bit of the liquidity here. So again, not a bad target for today, but we do have some key moving averages to get through before we get to that point as well. So bounces, but then you want to see it sort of bounce and reject fairly quickly on the moves down. And then, yeah, pay a lot of attention if we're down around, if we get below 60,000, that's when you need to pay some attention. All right. That should do us for today. Just go quickly to 12-hour. So, yeah. Back down into here. Wouldn't surprise me, but high 59s is a pretty good target. All right. That'll do for today. Catch you later.